So, welcome back, friends. The impact of President Trump's tariffs on prices throughout the economy is expected to increase over the summer. At the US department store chains, including Macy's, Nordstrom, and Dillard's, the evidence of more sticker price inflation is starting to show up across more items. Recent price increases in apparel, footwear, and bags across major US department store websites, tracked by DataWeave, indicate a turning point in May when prices started their ascent. DataWeave analyzes nearly 15,000 SKUs or stock keeping units, a scannable code which retailers use to identify and track a product, and has been collecting the data from January to June for signs of price hikes in footwear, apparel, and bags. Footwear is now as much as 4% above the January levels at some banners, while apparel is roughly half that pace. According to the data, Macy's 1,589 SKUs of footwear reported a 4.2% increase in price, followed by Nordstrom 3.1% and Dillard's 2%. Prices in store may vary slightly from online prices, but typically they follow the same pricing trend. Type of product and its sourcing can influence how fast the price hikes arrive. Private label lines, many of which are made in China, refresh every few months. So retailers like Macy's and Nordstrom feel higher landed costs sooner. Footwear reacts fastest because it carries some of the steepest baseline duties and relies heavily on China for finished pairs. Even a modest levy can ripple through quickly once fresh stock lands in distribution centers. Apparel with longer design cycles and a more diversified supply base is moving more gradually. So, here we go, friends. The SKU data supports findings from a recent survey conducted by the Footwear Distributors and Retailers of America, where 55% of the respondents said that they expect their average retail price to rise between 6% to 10% in 2025 as a result of tariffs. With all back-to-school styles now facing tariffs of between 10 to 30%, higher prices should not be a surprise this summer. While each company makes their own decisions, these tariff costs are now being felt across the board. In apparel, DSW topped the list in recent price increases at 2%, followed by Macy's at 1.9% and Nordstrom 1.8% according to DataWeave. If these tariffs persist or increase after July 9, we can expect more of the same in the seasons to come, leading up to the Christmas holiday season. In the bags category, which include handbags and shoulder bags, crossbody, sling and belt bags, totes, backpacks, travel and duffel bags, small goods and clutches, outdoor recreation store, RET had the top price increase at 2.6%. The Dillard's, Macy's, and Nordstrom all had nominal increases. So REI, top of the table. Trump had been non-committal recently on sticking to the July 9 deadline. His White House set for tariff deals with many trading partners or implement additional tariffs. The White House announced on Wednesday morning that it has a trade deal with one key retail manufacturing partner, and that's Vietnam. Stock prices rose as a consequence, even at the back of some very disappointing jobs data. Trump said in a social post, the tariff rate on Vietnamese goods will be 20% and go to 40% for any goods that are finished in Vietnam but originated in other countries such as China, in what he called as transshipment, a supply chain strategy also known as China Plus One that has been used by companies to avoid tariffs. Apparel companies that rely on Vietnam's manufacturing capacity could face higher import costs under the new tariff rate. Nike, Lululemon, Patagonia, Puma are among the retail industry companies with manufacturing operations in Vietnam. Vietnam is the second largest supplier for footwear, apparel, and accessories sold into the US market, according to the American Apparel and Footwear Association. In 2024, the US imported 274 million pairs of footwear from Vietnam, accounting for over half of all athletic footwear imports by volume and value, according to the Footwear Distribution and Retailers of America. And it says that Vietnam is on pace to be the largest international footwear supplier in 2025. The 20% tariff would be less than Trump's initial tariff of a 46% tariff on the goods from Vietnam, but would be stacked on top of existing 10% most favored nation tariffs paid by Vietnam, bringing the combined tariff to as high as 30% at a minimum, which could cause significant economic challenges for retailers. Meanwhile, the 40% transshipment tariff that has yet to be clearly defined by the administration, disrupting the pipeline with additional tariffs, would hit the American consumers and the industry hard. And Washington has called Vietnam tariff agreement as probably something which can come and upset the apple cart. Retailers have long warned that tariffs will impact the pricing, and some consumers may be starting to see those reflected in key consumer products. Tariffs continue to be a significant challenge for retailers, especially with the ongoing uncertainty and unknowns regarding the final tariff rates. The retailers have tried to mitigate price increases thus far, but the merchandise subject to the tariffs is working its way through the supply chain and is now being placed on more store shelves. We will be watching the back-to-school intake closely to gauge whether this pricing momentum accelerates or levels off. Eventually, all these price increases will be reflected in the consumer price index numbers as they keep coming in. You should be keeping a close watch at the July 15 CPI numbers, and in fact, even more at the August 15 CPI numbers, which would indicate inflation for the month of July. That, I think, would be about the time when the full force of the tariffs will start getting reflected in the consumer and the producer price index. So, friends, and that, I think, will be a very, very important factor which the US Federal Reserve will take into consideration in deciding on the interest rate cuts. They have yet to. This is what Jeremy Powell was saying about seeing the full impact of the tariff price increase, and before they come to final conclusions. So here you are, friends. The CPI and PPI numbers over July and August will be important criteria which will be taken into consideration by the US Federal Reserve. So these numbers, as they get revised from month to month, will be crucial in the determination of the Fed call whether they should be reducing interest rates or wait for some more time till the tariffs come down or there is better data to show that inflation is on a drop. To get to know more where the US markets are headed from here, because if it's environment where the interest rates are coming down, then that can lead to a good, nice rise in stock prices. On the other hand, if the interest rates remain just about where they are, then the markets will also remain just about sanguine. And to get to know where the US markets are headed from here, please do join our Prime Plus Telegram group for the US markets. It will tell you where the US markets are headed over the next few days, weeks and months. You can do that by WhatsApping us on 732-732-2720. Happy investing and have a nice rest of the day. Take care. Bye-bye.